Welcome to the Deep Dive. Today we're digging into something pretty significant, BlackRock's huge buildup of Bitcoin.
Yeah, it's been quite the headline generator.
Absolutely.
Yeah.
So we've looked at their ETF activity reports, some analysis on what this means for institutions getting involved, regulatory factors, and of course Bitcoin supply dynamics. And our mission really is to unpack what this massive accumulation actually tells us. What signals does it send about Bitcoin's legitimacy, the market itself, and maybe its future? We want to give you a clear picture.
And I think the first thing that just leaps out is the speed and the sheer amount. BlackRock's iShares Bitcoin Trust, IBIT,
Right.
it pulled in, over 41,000 Bitcoins in just a couple of weeks recently?
21,000, that's huge.
It is, and that brings their total holdings to something like 42% of all the Bitcoin held in these spot ETFs combined.
Wow, okay, 42%. That's dominance, isn't it?
It really is market leadership. It strongly signals BlackRock sees Bitcoin as a serious asset class, suitable for big institutional money.
But does that level of concentration, one player holding nearly half the ETF Bitcoin, raise any eyebrows? Any thoughts on market influence there?
Well, it's a fair point to consider, definitely. Concentration always warrants a look. But primarily, I think their steady buying points to a strategic long-term belief. They're not just playing around.
Okay, so it's conviction.
Yeah.
And zooming out a bit, thinking about wider institutional adoption, this feels like a major validation, wouldn't you say?
Absolutely. A huge one.
Especially when you consider Larry Fink's own history. Fairly skeptical in the past.
Right.
And now he's heading up one of the biggest Bitcoin investment vehicles out there. That's quite a shift.
It's a remarkable transformation, and I think it does more than just show their belief. It sort of creates a permission structure, as some call it.
Permission structure.
Yeah.
Meaning it makes it easier for other big, maybe more conservative institutions to jump in.
Exactly. If BlackRock's doing it at this scale, it signals a certain level of acceptance, maybe even legitimacy within traditional finance circles.
Interesting. And the timing feels deliberate too, right? This aggressive buying, it seems tied to the regulatory mood.
Oh, definitely. You see this big push after the SEC gave the green light to spot Bitcoin ETFs back in January 2024.
Right. The floodgates opened somewhat.
Yeah, and pouring billions in suggests they're pretty confident that the regulatory environment is becoming clearer or at least more predictable and positive for Bitcoin.
And we saw that broader demand too, didn't we? Like that $1.8 billion flowing into Bitcoin ETFs in just 1 week.
Yeah.
Shows investors were ready.
Precisely. Sustained demand meeting growing institutional confidence. It's a potent mix.
Okay, so let's talk numbers then. The scale is huge.
Yeah.
IBIT holds over 614,000 Bitcoins now.
That's the figure, yeah. Around 614,639 last I checked. And that translates to roughly 3% of Bitcoin's entire circulating supply.
3% held by just one entity's ETF product. That's significant.
It is. And you have to remember, every single Bitcoin they acquire is essentially removed from the readily tradable market supply.
So locking it up, in a sense.
Yeah, essentially. It's being held, likely for the long term, within that ETF structure.
Which brings us to supply and demand, the classic story. You've got this growing demand, both retail and institutional, like we just discussed.
Right.
And now a major player is systematically reducing the available supply. Basic economics suggests that puts upward pressure on the price, doesn't it?
It certainly could. I mean, less available supply facing steady or increasing demand. That's the textbook scenario for potential price increases. It really highlights how institutional accumulation can directly impact Bitcoin's market dynamics.
Okay, so let's tie this all together. BlackRock's major Bitcoin accumulation is clearly more than just a firm buying an asset.
Much more.
It shows deep institutional conviction, marks a real shift in how traditional finance views Bitcoin, seems timed with growing regulatory comfort, and, crucially, significantly impacts supply dynamics with potential price implications.
That sums it up well. Strong belief, shifting perspectives, regulatory confidence, and real market impact.
So maybe a final thought for you listening. As we see these huge established financial players increasingly embrace assets that were once, way out on the fringes, what other big shifts might be coming down the line? What happens next as this trend of blending traditional finance and newer asset classes continues? Something to think about.